So in Q1 FY22, that was definitely a disappointment from Maruti Suzuki, where the numbers were below expectation on majorly all the parameters, and especially the profit number did disappoint us. This time the company reported a profit of 440 crores versus our expectation of 819 crores. Now talking about the top line, so that somewhat tried to meet our expectation. We were expecting that to be at 18,018 crores, but that actually came in at 17,770 odd crores. But now operationally, if we see, then that was a bit lower than expected performance there as well. The EBITDA of the company came in at 821 crores versus our expectation of 1,035 crores, and the margins were also 1 percentage points below to our expectation, and this time it was at 4.6%. So last year, same quarter last year, that was definitely a washout for Maruti Suzuki. But over the next few quarters, like the Q2 to Q4, company somewhat managed to catch up with the sales that was there due to the pent-up demand, and also tried to hold up to its margins as well. But this time, that's a sheer disappointment. If I tell you the Q2 FY21 margins of the company, that was at 10.3%. Then comes Q3 FY21, that was at 9.5% EBITDA margin. Then in Q4, they reported 8.3% in EBITDA margin terms, and now it is at 4.6%. What has been impacting the margins of the company? We know that the company has been taking price hike, but as expected, the commodity inflation has been hitting the margins of the company really hard, and also the poor operating leverage, because this time due to the second COVID wave, that definitely must have impacted the sales number of the company. So this time the margins, that will be interesting to know how the management looks out to the margins panning out in the times ahead. But for now, that's a disappointment over there. But overall, if we see, then the volumes were up 362% on a YY basis. That was on a low base. But sequentially, like in the quarter-on-quarter terms, the volumes were down 28%. So we were expecting the revenues to be somewhat lower in what the company did in Q4. But the numbers in the revenue, the top line actually tried to manage and hold up to it, but that's the bottom line and the margins that are disappointing as of now. The realizations this time that were expected to be better on a quarter-on-quarter basis because of the lower discounts that were given, because of the better product mix of the company and the price hike that the company has been taking. But as we see that the margins are this much low, so that will be interesting to see what are the realizations and what is the uptick over there. Also, we were expecting that the ramp up of the third unit in the Gujarat plant might also put some pressure in the margins. So we will look up and we will be seeing what is the impact on margins over there, and what is the company actually planning to come up with its Gujarat plant, and how it will benefit or impact the margins of the company. Going forward, we will be watching out for the management commentary for their guidance for FY22, and also what is their festive demand outlook. So that will be interesting to watch. For more updates on Maruti Suzuki, you stay tuned with us.